It is shaping up to be a potentially defining week for investors. Corporate America starts reporting its earnings, and the bar is pretty high. At the World Economic Forum, there are questions about China, Russia, and America's position on the world stage. And it all culminates with an historic power shift on Friday. The 45th President of the United States will be sworn in at a time when many investors and Americans are trying to figure out what policies the new administration will usher in. We begin with Bob Pisani and the critical week for earnings.
The first wave of fourth quarter earnings, including that of Morgan Stanley's, which reported today, has generally been above expectations. That's good news. But as we digest the results, it's worth noting that 2016 was not a banner year for earnings. The S&P 500 earnings are projected to be up a measly 0.9% last year. That's according to Thomson Reuters. Now, much of the pain comes from this catastrophic 77% decline in energy earnings. And the market is anticipating this will reverse in 2017. Right now, earnings are expected to rise 12%. But most analysts have not changed their 2017 estimates to reflect the Trump agenda. Some strategists believe 20% growth could be possible. That's why the markets are like a tightly coiled spring right now. There's a lot of pressure to perform big in 2017. Energy in particular is expected to rise a whopping 366% this year. In fact, analysts have factored in a 100% increase in earnings just for ExxonMobil. That's the biggest energy name out there. Is any of this remotely possible? Some believe it really is. Rich Bernstein, for example, he's the CEO of Richard Bernstein Advisors, is in the camp that earnings are going to expand for several different reasons. First, Trump may not get everything he wants, but he's not going to come away empty-handed. There will be a reduction in corporate taxes, and there will be some kind of reduction in regulations. Second, we're also going to get some kind of stimulus program. It's unusual to get a stimulus program when the economy is improving, but it's definitely going to help earnings, certainly for industrials and materials. Third, the global economy is improving, and we are no longer in a global deflationary environment. Now, with this kind of data, Bernstein says it's rational to believe that stocks will rally and bonds will not. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.